Now, like I mentioned, our second half top-line view is for 5,000 level target for the CSI 300. In terms of market catalysts, market data already indicates that retail investors' participation remain very robust, and margin financing, which will most likely increase when commercial banks will issue brokerage licenses, is a form of reform, and actually it could even accelerate more through sector consolidation. Now, from a policy perspective, we need to know that effective this week, the CSRC has already approved reform to allow long-term funds for the likes of pension, insurance, banks to enter the bond market. Now, what this has in terms of implication and catalyst is that more liquidity will greatly reduce the local governments and corporate bonds repayment and default risk. And new bond issuance and subscriptions means that the real economy will get renewed long-term funding for development. Now, the entire mechanism means that the blue chips with good dividend payout structure will likely benefit the most, leading to optimism on the index.
Right, but at 5,000, you're projecting a 5% upside from the current levels for the CSI 300. What does that indicate for where the market stands in the current cycle?
Well, our 5,000 level target for the second half of this year actually began in late of early July. So we have seen a very big move right now in what we are seeing in the month of July. So literally what we are saying is that looking forward, we think that there will be a quick rotation into the domestic-related centric policy-related names. So you will start to see a rapid shift in that in order to support the index looking forward. Definitely the optimism is there because if you look from a broader investment strategy, China's industrial profit already accelerated to 11% in June versus 4% for the entire second quarter. And the data print is showing that inventory across the upstream, midstream, downstream already declined effectively due to inventory control. Cyclical-driven rotation is in play, and that's why all this mechanism means that our view to support the likes of construction, machinery, commodities, automobiles, properties, and e-commerce is playing out. So policy operating leverage is the key in the second half of the year, and that's where you want to bang on that in terms of a renewed channel stocking, a channel restocking. So our base case is for the real economy funding to be robust through all this bond issuance, and the big picture view is that China will lead in terms of industrial recovery.